proceed with the next session, and that is the panel discussion is on strategies for scaling from group lending to individual micro-enterprise loans. So I would request moderator Mr. Tamal Bandyopadhyay, who is award-winning author and journalist. Sir, I would request you please come on the dais. A big round of applause for sir. I would request panelists also to come on the dais. Mr. Sudipta Roy, MD and CEO of L&T Finance Limited. Mr. Aditya Chatterjee, Managing Director, Equifax. Mr. Rudra Chakraborty, Head East Ujjivan Small Finance Bank. Mr. Manish Agarwal, Chief Risk Officer, IIFL Samasta. And last, Mr. Siddharth Shankar Das, DGM, SBI, LHO, Kolkata. Sir, kindly take your seat.
Good afternoon and welcome to this session. Well, first a rider. It was supposed to start at 11:45, right? Sorry, it was supposed to start at 12:20 and now it's 1:10. So just 15 minutes late, 50 minutes late. And we are between you and lunch or, oh no, after this there is one more and then no, acha. Yeah, after this also there is one more and then lunch. So I don't know how to go about it. So maybe we cut it short, definitely not 50 minutes. We'll make it half an hour or something. What do you say? Huh? Half an hour is good because it's otherwise it will be a disaster. It's very, very late. So anyway, strategies for scaling from group lending to individual micro enterprise loan. Once again, very well crafted this panel, right from country's largest bank, State Bank of India representative here, then Small Finance Bank, Data, NBFC, everybody is here. I'm just for the cutting, since we are running late, I'm not getting into any elaborate description of the people here or the introducing the subject also in a very, very brief way. We touched upon this in the first session itself, and in some of the speakers also spoke about that. How do you graduate the microfinance guys into a larger role, and the microfinance itself plays a critical role. That's one part of the story, and the other part of the story is Reserve Bank of India has given the freedom to go for differential interest rates and so on. So it's actually there is enough motivation to get into break away from the group lending to individual lending, because this gives you freedom for differential interest rates going by the risk assessment of any individual. So this is the very, very brief thing. I'll start with Sudipto, because you represent a reasonably large NBFC, L&T Finance, very respected and all. So tell us what and you are not an MFI, you are an NBFC, right? NBFC, not an MFI, but MFI you can, certain percent of your can be MFI loan also, but otherwise you are a full-fledged NBFC. So tell us, Sudipto, what do you see and what's the way forward? No, you take this. No, you take this for the timing.
Thank you, Tamalda, for the question. First things is that obviously, if you look at the MFI lending model per se, the MFI lending model, though on the face of it, it is does not have any collateral. But what we use the concept of having a social collateral, right? Wherein, in a group model, your personal equity or personal discipline of payment is your social collateral, which is enforced by the group. And if you fail to do that, then though not might be the exact, but theoretically they call it social penalty, in the sense that the other group members also help to keep the entire performance in track. And it is quite amazing that in many cases, especially what we see in our portfolio, the performance of the MFI book as well as the JLG book is absolutely pristine. Me personally, having my background primarily from urban finance for many years in banks, it was quite an eye-opening, saying that how this particular credit behavior is maintained. And when we look at moving from there to individual lending, or maybe, you know, like individual liability loans, two things which I think as an industry we need to do. First is obviously, you know, these are like very commonsensical things that we all lenders, you know. First is ability to pay. Income estimation, whether we have the right income estimation. And last but not the least, you know, the sort of the willingness to pay, wherein whether the behavioral track for payment. Many of these women have been exposed to JLG format loans or MFI loans, which in our opinion does not give the full flavor of ability and willingness to pay, because the dynamics of group lending is very, very different from individual group lending. So the way we in L&T Finance are actually approaching this is that we genuinely, for example, a person who has taken second cycle, third cycle, has established a great amount of credit behavior for a 3 to 4 year period, we definitely think that they have the stability of income as well as they have the inclination and the discipline to pay in terms of individual loans. But two things are very, very important here. I think it's a gradual process. You should not rush them or move the ticket sizes very high enough. It's a gradual ticket size increase you should go with, and probably lead with a, what I called a quasi-secured or a semi-secured loan. For example, give them a two-wheeler loan or move them to a gold loan, and then move to a sort of a completely unsecured personal loan, right, or unsecured loan, which can be end-use oriented or which can be consumption oriented. But the fact is, it's a gradual process. Pushing these people directly into, you know, unsecured consumption oriented loan, probably in my mind is a recipe for disaster. So we have to be responsible about that and take it gradually, which we are doing in our company.
Thanks, Sudipto. Just can you give us in a percentage term, how much is in your company of the smaller loans, how much is into JLG and how much is individuals? Or it's entirely JLG?
It is entirely JLG. It is entirely JLG.
Okay.
We have a small proportion of rural business loans, but that's a new business that we have started. It's just like minuscule proportion, less than 1 or 2%.
Okay. Thanks, Sudipto. So it's essentially you are saying the social security works well for the group. I mean, we don't want to be embarrassed by being a defaulter while others are paying. That's the social pressure. Social collateral that we call it. And the process of change should be very, very gradual. That's what you're saying. And it has to be first semi-collateralized, then fully, absolutely. So let's hear one. It's all about lending is all about risk, and there is Manish, Chief Risk Officer, IIFL Samastha. Let's hear him. Mr. Dash will keep you the last speaker, because you will have the last word, being the largest bank in India and one of the top 50 in the world. So your voice is the strongest here. So we'll hear you there. Yes.
Yeah. Good afternoon, everyone.
Manish, from the risk point of view, how the transition or migration should happen?
Yeah, see, in the, like for most of the NBFC MFIs, those who are operating for 5 years, 10 years, several customers are having in the third cycle or the fourth cycle customers. They're already in the almost on the higher ticket size band, and increment as the year goes, the requirement goes up. But we need to maintain the balance in the center, so we cannot offer a higher ticket size loan. So of course, we need to not only provide the MFI loans, we need to provide the full financial services, several other product needs. That can be your two-wheeler, that can be consumer durables, that can be a business loan. So of course, there is a requirement for a higher ticket size loan from the customer. But the problem is, like as the recent, the RBI guidelines requires us to maintain the overall household income of 3 lakhs. So going above a 3 lakhs is definitely a issue, because those customers who are having a relationship of 4-5 years are normally moved above the 3 years old threshold. So there is a requirement to give us the individual loans to these kind of a customer. But of course, once you move from group to individual, it comes with the risk, as the sir was mentioning, that the social security no longer will be there. But of course, whenever we are moving, we'll have to come with the existing customer only. We don't need to go to the open market and do the individual lending. Whenever we do the individual lending, we'll have to follow the 3 things. That is, we call it a product, people, and the technology. So for any new individual lending, first of all, the product needs to be clearly defined. Product, when we say, it has to be initially for the existing lender only. We need to start more from the urban area because here the requirement is more, there's a more of a digital collection. So from that perspective, we need to design the product. And the ticket size also will have to be gradually increased. As the sir was saying, we cannot increase the ticket size substantially, so there the repayment capability is an issue. So product need to be defined. Again, the people. Again, when we are doing the group lending, our people are used to how to evaluate the customer, but in the individual lending, there is additional checks are required. So our field officer or a credit manager needs to be fully equipped with how the individual assessments are done. Here, the technology plays the important role where we need to look at the bureau data in more detail. We need to look at the alternative data like the mobile number robustness, their other social profiling. All that data plays an important role, and at the same time, we'll have to be very quick in the decision making. We cannot take a more amount of time in decision making as we do in the normal retail loan. So, as I said, people, product, and the technology plays an important role when we are moving to the individual loan. But definitely, there is a very, very big market which is lying there. At the same time, we'll have to maintain that the qualifying asset norm. So diversification will lead to the that will not be able to meet the qualifying assets. So we'll have to go for the co-lending approach or the BC model where we can actually tap these kind of customer. So the huge scope, and most of the lenders are moving towards that. As in IFL Samastha, we already have some portfolio. We have done, even before RBI guidelines came into the picture, we started this kind of a portfolio that was a small. So now the RBI came up, so that gave us that, yeah, we are going in the right direction. Though we have a small portfolio because of the qualifying asset, the restriction, but as going forward, we are looking big on this side.
Thanks, Manish. So you essentially in agreement with Sudipto that it has to be gradual, it cannot be drastic, and of course it has to be to the existing customers. So graduating them for this. Just one small thing if you can add also, because you are the risk manager and lending is all about risk. People are giving this about talking about technology, how microfinance industry, how it is looking at. How does it look at technology? Because we understand that as far as loan disbursement is concerned, for most of them is 100% now digital. It's because they need a bank account and all. But when it comes to collection, it's not. It's maybe 5%, 10%, 20, 30% and all. Why is it taking so long? And once, is there any apprehension about in the microfinance industry, since you also run a unit, is this one, the touch base, you can't afford to let it go. It has to be touch based, not tech based.
Yeah, correct. See,
very quickly. Huh?
Yeah, definitely technology plays a very important role. For the collection point of view, now gradually it is going up. Now I think in industry it is around somewhere between 10 to 20% collections are happening through a digital mode. But when we say a digital, we don't want to lose the touch point. We are giving the additional option to customer to, rather than paying in a cash, you just will advise them either through a QR code, they directly transfer through their account, or there are several other ways like a Phone Pay, Google Pay, where they'll just select the lender and the account number, and amount will directly go to your respective account. We don't need a reconciliation and all. But the more of a digitalization is happening on the urban area, where the people are having UPI and all that, they have access. But in the rural area, we are finding it difficult to convince to customer to pay on the digital mode. And more of, I think, the training is required. I myself went to several center meetings. I see that the customers are not aware that they can pay through a digital mode. So more and more training is required. And if we give, definitely this can go to 25 to 30% in going forward. But this number, we don't want to lose the touch point. We want customer to come to the center meeting and have a greater connectivity.
Thanks. So it's quite a while to be digitally savvy from now on. Aditya, we meet again. So tell us, what do the data say about this migration from group to individual?
Thanks, Ananda, borrowing up mic. So, as I said in my earlier discussion here, so the very positive news is that this graduation is rampant across asset classes. right? It goes as low as 5% and as high as 42%. What we are trying to do is, one is try and have more analysis in this graduation. So we have what you can call as a graduation score, like your credit score is 300 to 900. In the same way, we kind of assign a graduation score. We take a cohort, right, which has graduated, how it has behaved, and then there is a current cohort in MFI. So it's a statistical modeling that we use, but very simply put, there's also a score, like your credit score, there's also a graduation score which can tell you that what is the potential of this person based on past behavior, based on his or her behavior within the JLG in terms of graduating. That is one part of it. And second, as my peers discussed here, once you graduate, what is the loans, what is the asset class that you will go for? Let me give you an example. One very common asset class is housing or affordable housing. But as per norms, an affordable housing ticket size can go up to 25, 35 lakhs. Therefore, you can call it, we came up with that nomenclature called micro housing, right, which is 7 to 8 lakhs. Because when that person is graduating, he still is not in the realm of taking a 25, 35 lakh affordable housing loan. So these are micro housing which we have defined, which we try and measure, which is 8 lakhs. So like this, one example, we have to think more on this. We have to segregate that what is their stepping in the retail world look like, and once they master that, then they go into more kind of a PL, BL, high ticket PL also maybe kind of areas, right? But it also helps the underwriters because from a bureau perspective and any bureau perspective, that when you ping the bureau, you get the footprint of the person both in the retail and if she has had any footprint in the MFI bureau. So a lot of times when you are lending, even at the bottom of the pyramid, and you want to lend for, say, a two-wheeler, you will find that there isn't a file in the retail, but there is about a 6 to 7 year presence that the individual has had in the MFI, so it helps in underwriting as well. So overall, it's definitely positive. There are some checks and balances. The industry is also defining some new kind of products like micro-housing, but it's very, very positive and definite.
And you see that trend.
It's an increasing strength. The overlap, which was around 18% some 3 years back, is upwards of 35% nowadays.
Okay, excellent. Rudra represents a small finance bank. I think this is the first time we are having someone from your industry. So tell us, because you have exposure, and Ujjivan is particularly one of the probably one of the two small finance bank which is focused on, as we speak, on microfinance and all. Unlike others where basically they are pushing to the safety of more and more secured loan. So tell us from Ujjivan Bank, how do you see the transition or the migration from group lending to individual lending? Call it retail, call it whatever you.
So this individual lending we started in 2008, and way before microfinance crisis that Andhra Pradesh crisis hit us. It was very clear from our field visit, etc., that customers who are taking 5,000 or 10,000 rupees loan 2-3 years back, their aspirations are increasing. And giving higher ticket size loan without doing very good right assessment is a risky thing to do. So for that, 2008 we started this thing, but it is a slow cooking food. It cannot be done. It cannot be done grown in a very faster way, like we do in group lending business mostly. After crisis, we stopped. After microfinance crisis, we stopped this individual lending. Again, started in 2013, 17. After COVID, we stopped it again, and then after demand, we stopped it again, and again we started individual lending. But the good thing was that in 2017, after the demand, we saw the performance of group lending business and individual lending business was simply different. Collection in individual lending was much higher, where the assessment was very on a scientific way. After this COVID crisis also, we have seen that our individual loan performance was much better than group lending business. The latest example is Assam crisis. In 19, Assam was badly impacted. There also, where our group collection came down to 20%, our individual repayment was still at 66 to 70%. So I think the graduation individual loan is not for all. That we have to understand first. It is for those people, those customer base who require working capital, who may require purchase more cows, who may require a vehicle finance. Individual loan doesn't mean it is only increasing the ticket size. It's a right assessment, but the new segment will be found within the existing client base, and also there is an opportunity for all the microfinance organization to find new customer segment, which are mostly the open market customers in our current catchment area of a particular branch. So that's how I am seeing it with you.
So you heard him, all of you, that Rudra is giving a very different perspective. Individuals are more responsible, you were saying. Yes. Right? Yes. So it's a totally different one, market perception, or everybody thinks that it's the group, that's a social pressure, social collateral works better. But here is the gentleman with Jeevan Bank, and you are probably the third largest SFB?
Yeah.
Third largest
Right.
SFB or second? Third largest, yeah. So, and your book size is about what, 30,000 odd crore?
30,000 odd crore.
30,000 odd crore. He is saying that the performance of individuals are far better than the group, and giving even a Assam example. So let's hear State Bank of India, Mr. Dash, Jai Jagannath. So tell us what is your experience. Can you just put the mic on? No, they are regulating from there. I think there's a time mismatch. Yeah? No, you can take it. Or it's on? No.
Yeah. Good afternoon, Tamal Saab, and all my colleagues here, and the esteemed guests.
Yeah.
Our experience has enabled us to design new products, to envisage, to ensure the future India, that Viksit Bharat by 2047, and the 5 trillion economy by 27 or before that. And the experience with SSGs, that played a vital role, because if we look at the data points, that increase in women participation in labor force, particularly in rural areas, has gone up by 19% to touch 41%. This is the recent, in last 5 years data. From 18 to 23, that has gone up like 19%. Overall is also women participation has gone up to 37%. Semi-urban, urban, rural, everything. So the participation of women is a must if we want to achieve whatever Viksit Bharat, or say 5 trillion, and call ourselves a developed nation. So in that regard, I think we are on the right direction by selecting, to start with, SBI has developed a product that is Swayam Siddha, and from each self-help group, which is matured for the last 2 years, with 2-year track record, we are going to finance one person from each group to start with, all across the India. And why this need has come? Because after in the group itself, those women who are started some activity, they are graduating, and the more need of finance that the group may not be able to meet. And with the knowledge dissemination and the kind of activity we are able to generate, we have identified 30 activities which usually the women are undertaking in rural or semi-urban belts. And out of that, 21 are in SME segments, 9 are in agri segments. And if a country has to grow, then these 2 sectors has to grow. These 2 sectors, SME and agri, they will create requirement in personal segment and housing segment also. Because once you have disposable income, you will be able to think of, say, any, say, two-wheeler, four-wheeler, a house, anything, or children's educations, all this. And civil played a very vital part. People are very much aware in rural places nowadays also. We find regarding not to spoil their civil report unless there is a mishap or something like accident, something like that nature. People are very concerned about these things, which civil played a very vital part in making people aware, which is a very good thing. And that is why we are being very cautious also to start with. But thing is also there, the social capital which played, or the peer pressure which played in the in repayment in particularly SSGs, that trust has to come into play when we are financing individual entrepreneurs. So that definitely is going to be created because we are selecting from SSGs only, and the kind of SSGs we have, the number, from that to pick one, I think it can be more than 2, 3, or 5 even, going forward over a period of time, maybe a 1-year period. So that is also going to be a very important point, as well as with the digitization. Even the tea vendor is collecting money through your QR code or whatever, phone pay, whatever. So nowadays, our spending activity, that is also captured as various data points. And if going forward the models are prepared in such a way, I will not be surprised if I go to a shop tomorrow and purchase some sweets, I may get a message while paying that is it from sugar or jaggery, that kind of thing. Because if I have purchased medicine regarding diabetes from a shop earlier, that data point will extract here and that will give me some message. Because AI is going to rise like anything in everybody's life. So those things, the individual financer or lender has to build their model in such a way to capture the data points and the spending, the money that they are lending, how it is being spent. That can also be monitored nowadays with ease, unlike earlier years, that through the proliferation of digital mode across the country. So besides this, right kind of product development and robust risk assessment model for selection of the borrowers, and also to some extent, I will say, collaboration between the MFIs, NBFCs with the banks, from where they have a close relationship by borrowing or something else. Because when the borrowers, they are graduating to a higher level as per their requirement, if they can be, because of their past record, they can be given to banks. So banks will not find it difficult to help them in their activity by giving higher amount of loan. And the small tickets, where it is difficult for the banks to choose, where the say advantage is with the MFIs because of the network they are having at the grassroots level. So collaboration will play a very vital role going forward, which I am foreseeing right now.
Thanks, Mr. Das. So what you are saying is this technology will help us in this migration much faster way, and also one of the way of doing it right now, co-lending. As far as State Bank of India is concerned, if you have any sense, can you tell us like what would be the individual portfolio size, if not the entire State Bank of India, but in their eastern zone where you are located, versus the individual loans? I mean, SHG versus individual loans?
We have just started last month with the MOU with at the central level as well as in the state. And this month we have targeted around 200 individual borrowers selected through SRLM, mature SSGs, each one from one of the SSGs. And the target for this year is, we foresee that maybe another 500 because March is coming ahead. So going forward, next year target will be around 10,000 for this next financial year. So we are going in a big way so far as financing individual entrepreneurs, because from there also, the kind of that product says you don't need project report, which a rural woman or the semi-urban woman cannot, create herself. Similarly, no collateral up to 5 lakhs, starting from 80,000 up to 5 lakhs. 5 lakhs is a sizable amount to start a business, and you don't require any balance sheet. Nobody is going to ask any balance sheet. So these are the few things which will pave the way for the rural women and rural semi-urban places to ask for this kind of activity, and the kind of activity is required, no detailed project report is not required, which usually is a hindrance in starting the activity and financing in other schemes usually.
Okay. So State Bank of India is just starting this now.
Yes.
That's what I'm saying. And one person from a group.
Yeah.
And a group typically has how many? 30, 40, 20?
Minimum is 10.
But that's the minimum criteria. But average is much more, right?
Maybe 15, maybe 17, maybe 12.
So out of 15 or 17, one person you are picking up with the best credit history.
That is decided by the group itself.
Correct.
And the SRLM people.
Okay.
And since the group is matured enough, the activity are going on.
Right.
So we take that up.
And how much this person can get loan?
80,000 to 5 lakhs.
Okay. Okay. Anything else you were to add as far as State Bank of India, what is doing?
We have
In the co-lending space, are you tying up with NBFCs?
we are into the
because
co-lending also.
co-lending normally what
we are into
people
co-lending
say,
pool purchase also.
Huh.
And in co-lending, the apps, the kind of monitoring that is required. In the apps, we have also developed that. And that is why the integration that usually takes time, that has been, smoothened now. And faster onboarding. And in co-lending space, because of the digitization and all this, we are able to pinpoint which are the pockets, even the SHGs also, which are the pockets, geographies, where it is happening. We analyze that, and we pinpoint for creating awareness by having nukkats, street camps, street dramas, like kind of thing. And we are doing that also. We have gone in a big way across the West Bengal for creating that kind of nukkat dramas. So that will also create social capital for better repayment history and better utilization and better growth of the society.
So Dashrab, this is your first posting in Kolkata?
No, I was module DGM for 2 years in Kolkata, central city. And now I am in Agri for the last 1.5 years.
So this is a 3.5 years now.
Yeah, I have been here for 3.5 years.
With a gap or at a stage?
At a stage.
At a stage.
At a stage.
Final take is how do you see the customer behavior here?
So customers are good here.
Because at the headquarters you must be talking to other zones also. How they are different, or are they better or they worse? What?
So
people can hear you.
I'll just share my experience.
Very fast.
Very briefly,
Two
very
minutes.
fast. So thing is that the awareness creation is most important, which usually with the small borrowers we do not do or invest rather. Every time a government loan is given, we think that it is going to be NPA. Rather, I take it an opportunity to interact while sanctioning, handing over the sanction letter, that you are given this, and somebody having a cycle wants to look for a moped, and somebody having a moped looks for a scooty, somebody having a scooty looks for a bike, or so on. So everybody has an aspiration, being a human being, and this is not the end. I want next year coming back to us with a higher requirement for your loan. For that, we are providing a loan, but you have to put in your heart and soul and hard work. Then only you can graduate yourself to higher aspirations. That is all how I interact with the things.
No, that's
and that's how, sir, I must say that even during my tenure, whatever loans in government-sponsored schemes we have also given, they have been doing very well.
Okay. Manish, from a risk perspective, are there any, you have already explained how a technology can play a very critical role. Anything else you want to add for the industry's migration? So structurally, there is a co-lending model and other things and all. And also we have discussed that there cannot be any sudden transition. The migration has to be gradual. First, and what State Bank of India is doing is this picking up from the group and telling them that you decide who would come out of this group and become independent. That graduation ceremony kind of thing. from the risk manager's perspective, what are the key 2-3 things that we have not yet discussed as yet? One needs to be, if the people, industry people are there, if they want to encourage their borrowers to graduate from the group to individuals.
See, if we look at,
2 minutes.
if we compare the group lending with the individual lending, if you look at the data, the same ticket size segment, if you look at the unsecured loan, individual loan, that shows a significantly higher delinquency compared to the group lending. So that is the one thing that we need to keep in mind, that the segment like a 50,000 to 2 lakh rupees, 3 lakh rupees, that the NBFCs or the banks, whichever are giving, having a higher delinquency. So that gives us some kind of a risk that definitely group lending performs better. In the same segment, same geography, but the difference is only the group lending. So that is the important thing. So what comes here is the assessment, income assessment part, that when you are doing the individual loan, you'll have to have a very good income assessment part. It's not, you cannot rely on the customer declaration. You don't have a documented income. So for your field officer or your credit manager, he needs to be very, very sharp to identify the, to calculate the income. And we need to use several other technology, either could be a account aggregator or through mobile number robustness, or there is social profiling. There are several other tools are coming in the market through which you can come up with some kind of a income assessment. So that is required right now, currently, which is probably in the, I'll say in the very, very nascent stage. So that will help us in the correct estimation of income, and that will allow us to be at the same level if we go for the individual lending. And we need to be very innovative in the product, as it's a more from the working capital kind of requirement. So why not explore on the OD limit for the customer? Why not we give a pre-approved limit to a customer, an instant loan to such kind of a customer? We can have an attractive interest rate. So those kind of things we need to come up with the for our...
Manish, from the risk perspective, how do you find SBI approach, they're leaving it to the group instead of SBI getting into the risk assessment and income analyzing that, leaving it to the group of 15, 17, 20, that you decide who would get out of the group. Is that a right approach?
Yeah, see, that is okay. That is one of the approach can be
so
decided.
social,
we can take
social pressure could continue, right?
Yeah, social pressure will continue. That is one of the approach, but modus operandi will be difficult to implement at the initial stage till the time is scale up.
Thanks.
So initially we'll have to take some time.
Thanks.
To...
Rudra, you are the only one in the entire thing till now. You're saying that individuals, you are very happy with them because their default rate is much lower than the people in the group, so on and so forth. So what is the way forward? And Reserve Bank of India given the freedom that, the differential interest rate and all. So a bank like Ujjivan, which is primarily MFI based and all, you are what, about 80 to 82% is the unsecured loan? How big is your presence in West Bengal? In terms of branches, you have about 700 odd branches, right?
700 odd branches at Pan India. At West Bengal, we have 90 branches. 90? 90.
90. It's pretty big. Okay.
Yes.
Mumbai, you have 21, 22.
Yes, yes.
Yeah. So tell us, is that your approach now? You are more convinced that to migrate into group, from group to individual?
As I said earlier, this individual loan is not for everyone. So group loan will continue. There is a ample space for group loan business.
That's smaller in ticket size, much smaller.
Smaller ticket size. But if we see that group loan is based on the homogeneity of the group members. But now with the time going on and customers are taking multiple repeat loan, that homogeneity has become an heterogeneous. So the group guarantee, if we go to field and every time, there is no group guarantee almost at the ground. Doorstep collection is very high. And customers' digital repayment is also increasing. It is not pushing. We are not pushing, but customers are convenient to pay digitally. Their aspiration has also increased significantly. Their requirement for agriculture, house improvement, maybe livestock, home improvement, micro mortgage, etc., have increased significantly. How we serve these customers? Otherwise, these customers will go to some fintechs. It is very easy to get loans today in the market, unsecured loan. So to cater that customer segment, it is important to have a individual loan segment, because individual loan comes with a risk. It's an unsecured loan, higher ticket size, not doing right assessment will put us under tremendous risk if something goes wrong. So it is not, the question that you asked, it is not for everyone, but it is for the segment who is already ready to move to next level. It is also giving us an opportunity to find a new customer segment. We are working in a particular location for 10 years, 12 years. In 12 years, we have all our NCA customers. New customer acquisition has been done. How much penetration we can happen? That is why the data was showing that new acquisition is, new blood is not coming, but the ticket size is increasing. So you have to find out a new customer segment.
The same trend with Ujjivan also. In your West Bengal book, the book size is increasing, but the numbers of
No,
number of
that is
borrowers
not the
in-
case. So we have the database on that, and you can. Our ticket size is not at that par, and wherever it is at par, it is on individual side. So the credit assessment is very strong over there, and it's an independent credit person who does the.
And your what's your NPA?
Our NPA percent is, I think, 1 or 2% is kind of like that. Is it correct, Raviul?
You are the lowest. You have the lowest NPA in the industry.
Yes, one of the.
Yeah. So very modest regional manager who is not tom-tomming it. It's very good. So tell us, Aditya, what is from your point of view, how do you, what kind of data you would need, and are you completely, entity like Equifax, are you completely dependent on what data they give you, or you have your own audit, whether the data is correct or not, do you check and all? And in this entire transformation or the evolution from group to individual, and for the right reasons, what is the role of the credit rating, I mean, not the rating agencies, but the data agencies like yours? Quickly, 2 minutes.
Sure.
Yours will be the last one.
So yes, we are totally dependent on the data we get. We have to use that data. As per RBI, we can't even touch it or put a full stop or a comma there. So that's a regulation. So for good or bad, we are totally dependent. Hence, just taking one step back, I spoke about the household, measuring the household, and I know what we are getting is not correct. But we can't do anything about it, but tell you to give us more household-related data. That product will mature over a period of 1-2 years. But just jumping back into this, one is that, of course, the graduation will happen. Of course, that is how the cycle is, that existing people will graduate and a new people stream will come in. But the question that we also try to put to financial institutions is that when they graduate, do they remain in your fold? Right? That is the core question we try.
Meaning leaving you and getting into banks.
Yeah.
Okay.
So that is the core. We kind of very simply call it an on-off analysis. That how are you ensuring that they don't go off you when they graduate, and we show that through data, etc. So our theme has been to educate them in terms of data. Is that graduation is great, but you only take the benefits of that when it is still on you and they don't go off you. But the industry, the offers rate is high.
So there has to be a turnstile gate where people are going and new people are also coming. If Aditya is snatching customers from him, I mean, Aditya also, I mean, they are also getting new customers at the same time, right? Okay. Last time I asked and everybody kept stony silent for any question. I think now everybody is hungry and there are no question, right? Is there any question? Anybody who is from non-microfinance, this gentleman, Mr. Maiti, is sitting there, Entrepreneurship Development Institute. Sir, have any question? No? Nobody. So, boss, your turn. Tell us, you heard an NBFC or sort of MFI, you heard an SFB, you have a data analyst, and you also have heard the country's largest bank, the good, bad, and ugly, both the sides of group and individual lending. So, after hearing this, have you changed your opinion in your approach to group lending, or individual lending, or what else?
No, there's no change in approach.
Brief 2 minutes, and then
brief 2 minutes. I'll tell you. One of the things we'd underestimate in any lending process or design of any lending process is your collections footprint. Now, if you see in the JLG model, one executive covers or collects from 15 people in one spot. Now, moment you move to individual lending, you will require thrice them, because a person cannot physically collect more than 5 people, and digital collections penetration is only 15%. 85% still comes in cash.
Yep.
So your cost of collections will go 300%. That is to maintain when your collections efficiencies are at the same level.
Can't those borrowers come to the branch and pay off?
Many,
Like
most
for certain
MFIs,
banks, I heard.
in all villages, you will not have branches, etc. So,
Okay.
and these people have, okay, to a certain extent, they have got used to people coming at the doorstep and collecting.
Okay.
So, you know, at a fundamental level, if you were to scale up suddenly to the equivalent that you have 15 people and all 15 you give individual loans, then you have to triple your number of collections given the collections efficiency remains same.
Sure.
If your collections worsen, it has to go 5 times. So the cost benefit equation will completely
or
crumble.
digitization can take care.
So
right?
the real final, missing link in this is the digitization of payments.
Yeah.
Now it has happened in urban India. My guesstimate is that in the next 3 years, this will completely cover rural India. And that's when you will see the kicker of individual loans.
By when?
I would say it will come in by 2026 end or beginning of 2026. So 2026 will the breakout year, according to me, given that the payments maturity reaches to the villages and so improves to a 55-60% digital collections. That's when the kicker will come,
Okay,
which I
so-
think is 2026.
So the economists say that by 2027 we would become the third largest economy in the world after US and China taking over Germany, and so by that time you will see that digitization will be full form, and this from right now is 100% digitized disbursement, but only 10, 15, 20% entity to entity vary. Cash pool would be probably 100% disbursement, but you need to have more disbursement, 80, 90, 100% and all.
Till then, gradual scale up
Yeah,
is the way.
but this is going to happen. And RBI new norm also is probably the trigger of it, right? Yeah. Thank you. So we'll not stay long between you and lunch. That's the end of it. To summarizing is this is a trend. It's the inevitable, and how fast we embrace digitization and how fast we have sufficient and accurate data. I think these are the 2 points, and it's only logical that from individuals the graduation will happen. So probably 2 years down the line in Ashit Babu's function, and Kuldeep is the secretary, his function, we'll have the graduation ceremony of all those borrowers. So give them a big hand, all hungry stomach, weak hands, but whatever we can. Thank you all.
Ajit sir, I would request you to come and please on the dais and facilitate the panelists. Mr. Rudra Chakrabarti, Head of East Ujjivan Small Finance Bank. Mr. Manish Agarwal, Chief Risk Officer, IIFL Samasta. Next is Mr. Siddharth Shankar Das, DGM, SBI LHO. Thank you very much to all the dignitaries. I would request Pratyusha to take over now.